So CleanSpark has had a really good year of trading. Over the last 12 months, it's up basically 240%. You'd be hard-pressed to find many other stocks out there that have returned that much capital to shareholders just over the past year. Now, I'm not completely blind. I realize over the last 2 weeks, it's been kind of painful. The stock topped on March 25th at $23.40, and it's down more than 36% in just a handful of trading days. So CleanSpark and the Bitcoin mining stocks remain very, very volatile, but in today's video, I'm going to be discussing my future outlook for CleanSpark and why I think most investors are getting this wrong again. But really quickly, if you are new here or returning and not yet subscribed, please subscribe down below. We have one of the fastest growing stock market YouTube channels on this platform, and it's thanks to this amazing community, you guys that watch my channel. If you want access to the spreadsheet I'll share later in this video, or my buy and sell alerts, or my macroeconomic analysis, things like that, consider joining my membership. I'm entirely self-funded. I always will be. I'll always be independent, so your monthly support means a lot to me. You can check that out by hitting the join button located right next to the subscribe button or hitting my Patreon link in the pinned comment. Without further ado, let's get back into this video. Just for comparison, this is the largest public Bitcoin mining company, Marathon Digital. Over the past year, they're only up 33%. So it's clear that there's been a sentiment shift kind of away from Marathon Digital and to CleanSpark. And it's actually kind of interesting. If you invested in Marathon stock, you're actually underperforming the market, which if you're an individual stock picker, you always want to try and outperform the market. So if you're underperforming the broad market, especially in a highly volatile stock like the Bitcoin mining stocks are, you're really not doing very well for yourself. But that's besides the point. I put out this tweet the other day talking about Bitcoin miners and how they've been more heavily correlated with the NASDAQ than Bitcoin itself. Like if we think about Bitcoin, it's hit a new all-time high. It's still trading at close to an all-time high at, $65,000. The all-time high is at $72,000. But we're much closer to the all-time high than we are to recent lows that we set at $20,000 per Bitcoin not long ago. But it seems like year to date, and I actually have a chart of this that I can pull up, the Bitcoin mining stocks just haven't been getting much respect. Bitcoin itself is outperforming every single Bitcoin mining stock out there except CleanSpark. You can see this. This is since the spot Bitcoin ETFs were approved, how the Bitcoin mining stocks have even started to lag even more. And I've discussed this on my channel in the past. It's a new alternative. Billions of dollars are going into these spot Bitcoin ETFs. Inevitably, some of that cash is coming out of the Bitcoin mining stocks and into those spot Bitcoin ETFs. So you're going to have some temporary short-term selling pressure just because a new alternative to get direct exposure to Bitcoin has become available. Obviously, there's other factors at play, other variables at play here. But I do believe that this underperformance of Bitcoin miners in relation to Bitcoin is going to end. So I'll go back to this tweet here and explain my thesis. I say Bitcoin and the miners could be in for a fun ride while the rest of the market struggled to catch a bid. The NASDAQ itself, and we've called this out on the channel, but it's another topic for another video. Like since the end of 2022, we have been spot on here about the overall market direction. I was buying heavily when nobody else wanted to buy at the end of 2022. And then towards the beginning of 2024, I've been calling for this market top when nobody wanted to admit that it was coming. And here we are. The NASDAQ's down another 1.6% today, nearing that 4 to 5% correction already from all-time highs. It's happening pretty quickly. But again, topic for another video. I think this is going to be a rare occurrence. It's happened in the past, but over short periods of time where Bitcoin and the Bitcoin mining stocks kind of disregard the rest of the stock market. And again, I think we're in store for a similar time period today. And here's my thesis. The Bitcoin halving event paired with demand from Bitcoin ETFs presents a unique catalyst that has no effect on the broad markets, but has a large effect on Bitcoin and its derivatives. Point number one, fewer new Bitcoin can create a supply shortage, especially with spot Bitcoin ETFs adding thousands of Bitcoin and billions of dollars of assets under management every single week. Number two, the miners that survive the halving are more efficient and need to sell less Bitcoin to cover their operating expenditures. So again, it's another catalyst that is going to probably have some positive pricing pressure on Bitcoin overall because there's going to be less Bitcoin available for sale. And then number three, FOMO is an explosion waiting for a spark. That spark could be the supply and demand imbalance caused by the halving and the Bitcoin ETFs. And let me just tell you, If Bitcoin and the Bitcoin mining stocks start to vastly outperform the rest of the markets, the broad markets short term, lots of capital is going to come flooding into what's succeeding. It's just the way retail investors work in their mind. Whatever's going up is what they want to buy. Whatever's going down is what they want to sell. So yes, I could be wrong here, but I think Bitcoin miners, and maybe I should say CleanSpark in particular, is positioned to outperform not only Bitcoin, but the broad stock market as well here short term. So why do I think that? Well, it all has to do with this news release that came out just a few days ago. They announced that they exceeded 17 exahash per second, but most importantly, they exercised and upgraded their previously announced option for an additional 100,000 Bitcoin mining rigs. So the company just exceeded 17 exahash per second, but this 100,000 mining rig order alone is going to add 23.4 exahash per second of mining capacity to the company's management. Now, what's particularly impressive to me and the rest of the markets is that this call option was actually for S21 mining rigs. They were able to negotiate receiving S21 Pro mining rigs for the same exact cost. The Pro version of the S21 miner has a 14% improvement when it comes to joules per terahash, which is a measure of efficiency, and a 17% increase in hash rate, or approximately 3.4 exahash per second more hash rate for the same amount of cost. They didn't have to pay any additional money to get this extra 3.4 exahash per second and more efficiency. So in regards to this announcement, I put out another tweet. If you don't follow me on Twitter, or X I guess it is now, make sure you do so. Rex_finance is my username. I said, I'm expecting the company to increase its 2024 year-end hash rate guidance by at least 25% to 40 exahash per second shortly. You can see in this chart here, as of their most recent update, they have their year-end guidance sitting at 32 exahash per second. So increasing that to 40 exahash per second would be this 25% increase to guidance that I'm projecting and that I'm talking about in this tweet. I say this would make them the largest public Bitcoin miner by hash rate at year-end. The next closest would be Marathon Digital, who's projecting 30 exahash per second at year-end. And they've had operational issues where they can energize their mining rigs, but they just can't seem to keep them operational. And then again, it's another reason CleanSpark trades at a premium compared to Marathon Digital or these other Bitcoin mining companies. They have the best operations, they have the best execution, they have some of the best efficiency, they have some of the best power costs. All in all, analysts in this space are valuing CleanSpark with a premium, and rightfully so. It might not be the case, like a lot of people believe, that these other mining companies out here and other mining stocks are undervalued and CleanSpark is overvalued. Usually when a company trades for a premium, it's for a good reason. So a different way that I would encourage people to think about it is CleanSpark is trading at a fair valuation for how well they've executed. I then say with the recent purchase of 100,000 S21 Pros, they have secured enough miners to reach more than 55 exahash per second. The reason I don't think they're going to hit 55 exahash per second by the end of 2024 is simply because infrastructure is their problem. They have the mining rigs, but they don't necessarily have the infrastructure available to deploy those mining rigs. Now, that can change quickly as a result of this halving event coming up, and that's something I'll be talking about here in just a little bit. But yeah, the issue is the infrastructure, not necessarily the company's ability to execute. They've proven in the past they can execute, and there's people now doubting that CleanSpark is going to continue to execute. People are doubting this company again. People are doubting this valuation. People are doubting that they're going to be able to achieve their guidance and maybe even overachieve their guidance. Man, it's just like people haven't learned from the past, getting smoked by short selling CleanSpark stock and going long the other public Bitcoin mining stocks. It's been a horrible move that a lot of people have made. But I do clarify in this post that I think the halving event is going to present some unique acquisition opportunities. And I think CleanSpark's management team is going to continue to be acquisitive. I think that's a word. It makes me sound smart. I think they're going to continue to be acquisitive just based on the way they've been talking at investor conferences and in investor presentations. They want to keep growing, and they no longer have to fork out change to buy mining rigs. They have to fork out change to buy infrastructure. And infrastructure generally is going to cost less than the mining rigs. So I'm actually happy that this cycle they front ran the purchase of their mining rigs, because that means the bulk of the dilution is now in the past. Infrastructure is still going to be expensive, especially if they have to build fresh new infrastructure, but I'm hoping as a result of this halving event, there's going to be enough infrastructure that comes up for sale that CleanSpark can come swoop in and purchase and maybe expand existing sites, which is always more cheaper than starting greenfield and starting from the dirt and building your own facilities. So I clarified, the halving event should provide some unique acquisition opportunities of private entities. That's a key couple of words, private entities. Lots of private operators have attractive infrastructure and power costs, but they lack efficient mining rigs to keep them afloat post-halving. Remember, the halving event, all else remaining equal, is going to cut mining revenues in half. Industry analysts right now, on average, are projecting a 30 to 40% gross margin decline industry-wide for the Bitcoin mining companies. And there's a big difference between public companies and private companies. Public companies can raise capital very quickly via ATMs. We've seen this take place in the Bitcoin mining space, but they can raise capital. They have an extra lever they can pull to increase their liquidity if they need to increase their liquidity. Private companies don't really have that option. Sure, there's private equity out there, but it's not as simple and it's not as fast as just the ability to turn around and say, hey, I want to sell, 1 million shares into the markets today. And you just have public investors buying up whatever dilution takes place in the public markets. You just can't do that in the private markets. So I think this having more than ever is going to kind of expose a lot of these private entities and private operators. At the end of this post, I note how the network hash rate has climbed considerably in recent months, but how I think that is actually a result of these private entities redeploying and re-energizing older and less efficient mining rigs that just, very quickly had become profitable again. It wasn't that long ago that Bitcoin was trading at $20,000, $30,000 when these older, less efficient mining rigs were unprofitable. Well, really quickly, Bitcoin has reclaimed all-time highs. We're trading at $65,000 today. And so as a result, a lot of those older and less efficient mining rigs have been able to be redeployed, re-energized, and start hashing again. And I think that's the bulk of the recent climb we've seen in the overall network hash rate. But again, post-halving, I mentioned it here, I believe there's 80 to 90 exahash per second in the total network currently operating at greater than 40 joules per terahash, which just vanilla means that 80 to 90 exahash per second of miners that are operating currently are not very efficient, and they're going to have to shut down post-halving if the price of Bitcoin is trading at less than $85,000 to $90,000 in most cases. There's going to be a couple of scenarios where companies just have basically free power, where no matter how efficient their mining rigs are, they can mine at a profit and they'll always remain operational. There's a couple examples like that out there, I'm sure. But for the most part, I think this 80 to 90 exahash per second is going to come offline immediately following this halving event. And this is a big reason I expect the total network hash rate to decrease by around 15% in short order post-halving. However, as the infrastructure is bought by public companies who have access to liquidity and the older miners are replaced with newer ones, I think the total network hash rate will bounce back pretty quickly. This halving event is going to take place in 4 days, 6 hours, and 11 minutes from now, so it's right around the corner. And if I'm right about my thesis with this, and Bitcoin and these Bitcoin mining stocks kind of separate themselves short term from the rest of the markets and what the rest of the markets are doing, we could be in for some really good returns in CleanSpark stock especially. And thankfully, I've been given access to different research reports from JP Morgan, HC Wainwright, Cantor Fitzgerald, you name it. All of these entities, all of these analyst firms, or these banks, I guess you could call them, have CleanSpark being the best positioned miner post-halving because of their large scale, because they're highly efficient, because of their low production costs, and because of their strong balance sheet. And again, as a result of all of this and the management team's ability to execution is the biggest piece to this puzzle that most public mining companies are lacking. CleanSpark's execution has been second to none, and even investors that don't invest in CleanSpark agree with this. They wish that their management teams could execute like CleanSpark's management teams can. So rightfully so, CleanSpark is trading at a premium right now to the rest of the space. I don't think it's incorrect for them to be trading at a premium, and I don't think that means that the upside for their stock is limited. People out there like to microanalyze this space, and they talk about, based on current Bitcoin prices, these Bitcoin mining stocks look overvalued. Well, you really can't use traditional business modeling or financial modeling to put a value on these companies because there's no baseline. This is a new industry. It's a new asset that is unlike any other asset that has ever existed. And we just don't have enough history to really tell us what is overvalued or undervalued. And it just makes sense that these Bitcoin mining stocks will trade at a premium to what you're used to or whatever baseline you have, because it's actually safer for people to value these companies to the upside, because it's much more likely that Bitcoin moves up than down at this point in Bitcoin's life cycle. People believe in it, adoption is growing, and ultimately, if that continues to grow and grow and grow and grow, and we're pretty young still, the price of Bitcoin is going to go parabolically up. Some analysts have Bitcoin hitting over $1 million by 2030. If that happens, do you really think we're going to be looking back at these Bitcoin mining stocks today and saying, in 2024, they were overvalued. I am so glad I didn't buy them. Well, of course not. Of course not. So don't get lost in the weeds. Don't get lost in the sauce, as I like to say. We can do these projections. We can model these things out financially. But again, what is correct? That's what we have to question here. And, over time, we're going to start to figure out what's overvalued, what's undervalued, But ultimately, if Bitcoin succeeds, these Bitcoin mining stocks are going to succeed, and a rising tide lifts all boats. But I would rather put all of my cash on a single horse than spread my cash out between all of the horses. I'd rather focus my cash on the management team that has executed, all of these things I've already mentioned in today's video. Why would I want to buy another miner in this space that has all these different strings attached? Oh, they haven't been able to execute. Okay, I'm going to make a bet that they're going to be able to change and they're going to start executing. Why would I do that? Why would I risk that when I can get exposure to a high quality company that has already proven it, right? So that's what I struggle to get my head around when people say, I don't want to invest in CleanSpark because they look overvalued. And I think a lot of people also get lost in thinking that there's horrible sentiment around Hut 8 mining right now. And because it's such horrible sentiment and nobody else has invested in this, I'm going to invest in this because I saw, RexFinance and all these other investors buy CleanSpark when nobody wanted it and everybody thought it was a bad company. That's going to repeat. I'm going to buy Hut 8. I'm going to buy Marathon when things look bad. Well, the difference here is we can't just look at sentiment and ignore the rest of the operations when saying if we should buy or sell a company, right? With CleanSpark, I wasn't buying CleanSpark at $2 to $4 because, the sentiment is terrible right now. They're not getting any respect. Yeah, sure, that was part of it, but the bigger aspect of it was I believed, based on the management team's history and what they were saying, that they would be able to execute, that they would make good decisions, that they would make accretive acquisitions for shareholders, right? I saw the backbones of the overall operation. I wasn't just basing my investment solely on the sentiment around the stock. So I do just want to echo, be careful. Be careful out there if you think just because sentiment is bad or just because you think a company looks undervalued compared to CleanSpark, it doesn't necessarily mean it is. And again, all of these people that have started to doubt CleanSpark again, doubt their ability to execute on their projections and on their guidance, Have we really not learned our lesson over the past few years about CleanSpark's management team? I would not be betting against them. If I wanted Bitcoin mining exposure, I would at least put a piece of my pie into CleanSpark. But anyways, I know I went on a little bit of a tangent here. Back to this halving event. What this is going to do is it's going to cut industry revenues in half. It's going to make some operators out there have to end their operations, sell out. It's going to trigger a wave of consolidation. There's going to be attractive infrastructure that comes up for sale, and there's going to be really efficient mining rigs that come up for sale because there's two baskets. Either you have attractive infrastructure, but not very attractive or not very efficient mining rigs, so you sell your infrastructure, or on the other scenario, you have really attractive or really efficient mining rigs, but really sucky infrastructure or really sucky power purchase agreements. So in that case, you have the mining rigs come up for sale. There's going to be a wave of consolidation. There's going to be a wave of acquisitions. There's going to be a wave of growth and mergers. And ultimately, I've said it before, but this is like farming. I come from a farm family. The big get bigger and the small get squashed. The less and less players there are, the less and less capex that's going to have to take place in this industry, especially when you consider a company like CleanSpark, who already has the mining rigs. They've paid for the mining rigs, and now all they have to do is pay for the infrastructure. CapEx should slow down, and less operators are going to be competing against each other in this arms race, which is good for all of the remaining operators. And if you're curious about Bitcoin's price action around these halving events, it gets better and better the longer term you look. But I want to be clear, like, this isn't just based on halving events. Like, no matter what time period you look at, if you look short term, it might not look so great, but long term with Bitcoin, it always looks good because Bitcoin's appreciated 20,000+% in such a short amount of time. But if we really want to look at this, you can decide how much, notoriety you want to assign to this. But the 1 month return following the halving events doesn't look that great for Bitcoin. 3 month return still doesn't look that great, but then 6 months after the halving event is really when gains start to grow. 36% in halving number 2, which happened in 2016, 82% in halving number 3, which happened in 2020. And you can kind of see the 9 month return gets even better, and the 1 year return gets even better than that. But let's move to my CleanSpark price target spreadsheet. If you want to get access to this, all you have to do is join the membership. Hit the join button located right next to the subscribe button, or hit my Patreon link in the pinned comment down below. It still baffles me there's CleanSpark shareholders out there that aren't a part of this membership. I have a 100% refund policy. I think it's the cheapest membership on YouTube. And if you don't find value, I have a 100% refund policy. I've yet to have to refund anybody. So let that speak for itself on the value I provide. So let's look at this. I have this in the CleanSpark price target spreadsheet, the total revenue opportunity, and what that looks like for Bitcoin. I'm going to actually have to make some changes to this, so bear with me. The last time I updated this, Bitcoin's trading at $47,000. Obviously now it's trading closer to $65,000. So I should actually update this date as well. So this is what it looks like currently with Bitcoin prices at $65,000. 900 Bitcoin are mined network-wide every single day. This means that there is a total revenue opportunity for everybody that's part of the Bitcoin mining pool of essentially $61 million. And annually, that equates to $22 billion of revenue opportunity. Now, after this halving event takes place, which decreases the block reward in half, there are only going to be 450 Bitcoin mined every single day. And at a current Bitcoin price of $65,000, you can see how the total revenue opportunity gets cut in half, basically, to $31.5 million. And I think there's a big misconception out there with owning or buying into Bitcoin mining stocks. Ooh, their revenues are going to get cut in half, but there's so many variables at play. This, A, doesn't consider transaction fees, which are probably going to continue to grow, and B, it doesn't consider the fact that less operators are going to control more of the network. So even though on paper it looks like these mining companies are going to be mining half the Bitcoin or receiving half of the revenue they were prior to the halving event, they're going to be mining more blocks every single day than they were prior to the halving event. And if they mine more blocks, even though the block reward got cut in half, you can see how that can kind of offset any difference there, where the remaining operators post-halving actually probably won't see their revenues cut in half, especially if the price of Bitcoin continues to go up as a result of Bitcoin ETF demand and this supply imbalance that's also being caused by this halving event. But also included in this CleanSpark price target spreadsheet is their mining rig purchases journal. And I've added the most recent 100,000 mining rig purchase order to this spreadsheet. And in total, you can see that the company, ever since it started mining Bitcoin, has acquired and bought 56, almost 57 exahash per second worth of mining rigs. Now, inevitably, some of these older generation miners that they purchased back in 2021 are going to be replaced if they haven't been replaced already. So I think this number is probably closer to 50, maybe 54, 55, but I don't think it's 56 or 57. Not much of a difference, but I did want to point that out. And this is where this sheet comes into play. I set my pre-halving network hash rate to 600 exahash per second a while ago, and it's funny, people called me crazy. You think it's really going to be that low, Rex? And it looks like that's going to be spot on. Also, CleanSpark's exahash per second, I was actually low on. They achieved 17 prior to the halving event, so I'm going to change that quickly. And then as a result of my tweet today on my beliefs, I'm actually going to raise their year-end guidance because I think they're going to raise it. I'm going to raise it to 40 instead of 33 in my spreadsheet here. But I'm going to change my network hash rate for the end of 2024 from 500 up to 600. I think throughout the rest of the year, the network hash rate is going to remain pretty flat, if not go up. I'll leave it at 600 for now, though. I don't think it's going to come down and stay down unless Bitcoin prices crater, which I guess is possible. But what this means is CleanSpark currently only controls less than 3% of the total network, and by the end of the year, that could go up above 6% of the total network. I won't bore you with the rest of this, but I'm going to make some changes to the rest of my spreadsheet here. Again, if you want to put your own inputs into this and get your own price targets, which I have on this sheet, you just change my inputs and you can get your own price target projections. Again, you can download it by joining my membership by hitting the join button or joining my membership via the Patreon link in my pinned comment. But I'm going to make some changes here and I'll be back with you in just a little bit. All right, so to come up with my price targets, I take into consideration CleanSpark's total revenue opportunity, which by 2030 I think stands at over $11 billion. And it also takes into consideration their estimated costs and my projected gross incomes for them if the price of Bitcoin keeps going up and trending towards $1 million, which is what a lot of analysts think is going to happen. A lot of them actually have $1.5 million by 2030. This is a bull case scenario spreadsheet. It's possible Bitcoin won't hit $1.5 million by 2030. I completely agree with that. But this is, again, bull case scenario and what a lot of bullish analysts have, $1.5 million per Bitcoin. So that's why I have these numbers. In total, I have the company acquiring a total balance of more than 56,000 Bitcoin by 2030, which would be valued at alone $84 billion. Now, it's really hard to project stuff this far out and this far in the future, if that makes sense, because it's hard to estimate, what mining rigs are going to cost, what infrastructure is going to cost. It's also hard to project what transaction fees are going to look like and the other revenue opportunities out there that might present themselves for Bitcoin mining companies and other ways these companies might be able to monetize their HODL balances. So all of this is subject to change, and again, this is just my best guess, sitting here in April of 2024 of what 2030 could look like. But taking all of these numbers into consideration, my price target for CleanSpark by the end of 2024 is $37. Anything below $37 based on my inputs and based on what I believe is undervalued. By 2030, I have the stock hitting $1,000 per share, which is crazy to even think is possible at this point. But that would represent 6,760% return and a life-changing investment. So if you believe in Bitcoin, again, it might be a good idea to get some sort of Bitcoin exposure for the next decade. Buy some sort of Bitcoin mining company, because I'm not naive. Every single Bitcoin mining stock out there is going to trade at a premium and at a beta to Bitcoin of greater than 1, meaning if Bitcoin does well, Bitcoin mining stocks are going to do even better, but if Bitcoin does poorly, Bitcoin mining stocks are going to do even poorly. But with that, I'm going to end this video here. I hope you guys enjoyed this. Again, if you're new here or returning and not yet subscribed, please subscribe down below and check out my membership by hitting the join button or hitting the Patreon link in my pinned comment. I also have a resource in the description of the video, How I Learned Bitcoin. It's a book on Amazon. It's a cheap one. You can buy that book. I highly recommend it if you want to learn more about Bitcoin, its use cases, and why it's such an attractive asset. With that, I hope you have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.